Welcome to the Naked Forex webinar where we're going to talk about the long-term charts. Some of my favorite topics are related to long-term charts. Some of my favorite setups actually are long-term charts. Just because it's a long-term chart doesn't mean you have to stay in the trade a long time. And just because it's a long-term chart doesn't mean you have to fall for some of the mistakes or pitfalls that a lot of traders end up falling for when they trade the long-term charts. So in today's session, that's what we're going to look at. We're going to look at some of the things that are pitfalls and some of the reasons why you don't need to make the same mistakes that a lot of other traders make. So thank you so much for spending time here today. If you haven't been to the Naked Forex webinar, then you probably don't know why my charts look like the way that they do. Essentially, my charts have only a few things on there. Those things are usually horizontal support and resistance lines, and that's about it. And the rest of it is sort of like, you know, where might the market go sort of thing. So, for example, this box right here, again, is based on horizontal support and resistance. I'm expecting at some stage for the Aussie dollar to get up to this area here, where it's hit this box in the past. They hit it here. And I reckon when it gets up there, it's going to have a little bit of trouble. Now, when I'm trading the long-term charts, what I'm talking about is essentially, I don't really consider a daily chart a long-term chart. I know a lot of currency traders would. I actually consider the weekly charts to be, the weekly charts to be what I would consider a long-term chart, or a monthly chart would be a long-term chart. Some people trade the quarterly charts. That's a long-term chart. But I want to focus in, for the purposes of this webinar, I want to focus in on the weekly charts. And I want to talk about what a lot of, there's some misconceptions out there, okay? How many people here have traded the long-term charts? Who here has actually taken a trade, at least one trade, on the long-term charts? Anybody? Anybody who has done this before? Yes, yes, no. Sandy says no. Trend says yes. Himashi says yes. Okay, so essentially, the way I look at it is it's no different than trading the 4-hour charts. It's just, it takes a little bit longer, The main thing that I hear a lot, why wouldn't you trade the long-term chart? Like Heinz says that you haven't traded the long-term chart. Why is that, Heinz? Why wouldn't you trade the long-term chart? Like, why wouldn't you take a trade on the weekly chart? Yes, and I'm glad you said that. Bigger stop loss. This is, and we're going to tackle 3 of these things tonight, or this morning, actually, if you're in Europe, as many of you are. And so let's talk about these 3 things, because the number one, and I was kind of trying to fish it out of you, and I'm glad Heinz went for it, which is, this is the idea of a long-term trade means a wider stop, or bigger stop. Yes, and exactly right, Trend Trader. Yeah, Trend. So here's the thing. Let me show you one actually. Let's see if I can find. Let's see if we can find one. Okay. So here's one. All right. So you know what? This one was only 106 pips, so that's actually not a very good. Let me actually find a better one. You know what? We don't even have to actually have, that's daily anyway. Let's find a trade and let's calculate it. Let's say that you are a let's say that, and this isn't really about trading the big shadow, but let's say you're a big shadow trader and you identified this big shadow as a high probability setup right here. Oops. Let me pull this back. So let's say that you, and we'll if you haven't seen the big shadow system, we'll do another webinar on it so that you get the rules. But basically, it's a big engulfing candle. It's taking out the previous candle. It's got a higher high. It's got a lower low. It's got a close up near the high. It's on a significant area of support and resistance. The next candle trades higher. So normally, if I was going to get in on this one, I would get in probably around here, and I'd have a stop down here. That's about 877 pips, which is not a lot to sneeze at. Now, the euro kiwi is more volatile than, for example, the euro dollar. It's one of those pairs that really likes to move around. So even though you think 877 pips, that's a lot, it's not that much for the euro kiwi. The other thing that I want to point out about this trade is that, well, we'll get into that in a minute. I don't want to jump the gun. So I look at this and I go, oh, wow, 877 pips. That's crazy. But if I go to the euro kiwi, which is, where is it? It's going to be down here. So let me show you guys. Right here, it's gonna be right. Euro kiwi. Forex majors. It's not a major. Where the heck is it? It's not the extended either. There it is. Okay, cool. So if I look at this and I go, oh, okay. So, I'm looking at a standard lot size here, right? My swap isn't really, if I go long, I am paying a little bit here. Yeah, but I'm happy with that, and I go ahead and jump into it. Now, let's say that I'm looking at this target right here, this resistance level right here, which, remember, I had 877 pips. It's only 460 pips away, okay? So what I might have to do is actually draw another area of sort of like a minor level, which would have to be, actually, here it is right here. See right there. Yeah, that's it. Essentially, these lows right here were found right here. So what I might have to do, let me just double check this. Yeah, there you go. That's 950 pips. So I've got 950 pips on 877 risk. So that's better. Now, I probably wouldn't have been able to go for this area because it's just too close. Here's the thing, guys. Because you can adjust your lot size, there is no excuse for not taking weekly charts. If you look at the weekly charts and you say, those are really good. I love the way that moves. These are smooth charts. They're predictable. Things happen in slow motion. I can still, like, if you have a job, you can still work your job and trade them or whatever. The number one thing that comes up is people will say, I can't do it because my account's not big enough. Well, here's the thing. You don't have to trade a standard lot. And if your broker makes you trade a standard lot, you all you have to do is find a different broker, because you can set your lot size so that your dollar at risk, or euro or pound or whatever currency pair you hold your account in, that amount at risk is actually the same as it would be if you took a trade on the 1 hour chart. And the reason why that's the case is you adjust your lot size. So for example, maybe if I took a 1 hour chart trade and I had a 30 pip stop, maybe I take 3 standard lots, right? But maybe if I have an 877 pip stop loss, I don't take 3 standard lots, and instead I take 0.15 standard lots. right? Or something like that. So that's kind of how it works is you've got to go in and adjust it. And if your broker doesn't allow you to do that, if your broker doesn't allow you to take, you know, micro or mini lots and really get down to the fine tune and nitty gritty, then I would say find a new broker because there's no reason. In fact, there's no reason not to trade a trade when you see it on the charts. And if your broker is the reason for that, that's getting in the way, then time to find a new broker. The other interesting thing about this is that if you have the precise risk right on every trade, what that means over time is if you have a winning system, it actually means more money in your pocket. And that's all math. That's not any sort of, wild claim that I'm making. If you're making money over the long haul, and if you're trading where you can't really adjust your risk size, so you have to decide, let's say you risk 2%, but because of the way your account's set up, it doesn't allow you to make really, fine tune your lot size. So maybe sometimes instead of risking 2%, you risk 1.75. And sometimes you have to decide, am I going to go over 2% and risk 2.1%, or am I going to go under and risk 1.85 or something like that? And so what happens is if you go, you decide to go cautious and you risk 1.85, and then that's a winner, you actually miss out on the extra profit you would have had if you had really risked the 2%. Does that make sense? I can actually show you this on a spreadsheet, and maybe we'll do that on a different webinar. But right now, I just want you to understand that this idea of being able to adjust your lot size is critical to being able to trade the higher time frames like the weekly, especially if you have a smaller account. When I say smaller account, I mean like say under 20,000 euros or something like that. Okay, that is absolutely critical. So that's the number one thing. The number one thing is people say I can't trade the higher time frame charts because the stop is too far and I'm risking too much in my account. And my answer is it's not. The problem isn't that the stop is too far. The problem is that your lot size is not correct. You need to adjust your lot size. Okay, so that's misnomer number one. That's the pitfall that a lot of traders fall into. And some traders will actually take the trades, and then instead of risking 2%, they risk 12% or something wild like that. And then they get these wild swings in their account, and it actually just breaks them down because you only need a few losers at 12% and you're really in the hole, right? So, all right, cool. So let's keep moving on. That's the number one thing about trading the higher time frame charts. I'd like to show you the other one, actually. Let's see. I'm not sure how far this is going to go back, but let's see. 729. So we'll go daily. All right. Actually, why don't you guys give me a chart that you want to use? Just throw out a chart. I don't want to one of the things that I try and rail against is cherry picked examples, because I want to show you how naked trading works on all time frames, on all markets, and that sort of thing. I don't want to just pull out a couple of sweet examples. So why don't you give me the charts that you want to see, and we will use that one. Euro. Yes, Mr. C. Yes. Euro Aussie, Euro Norwegian kroner. I love it when people bring up the Nordics. It's awesome. Okay, Euro Aussie it is. All right. Okay, so this is the Euro. See, I'm waiting for this pair to get up to 45.75. That's where I want to see it bounce. But okay. Well, I was hoping we'd set. Let's see here. I guess we can use this one. It's not what I would call an ideal kangaroo tail, but it's a king. Technically it is a kangaroo tail. It's just the tail is so tiny. But let's take a look. Let's take a look anyway, because it will illustrate what I'm talking about. I'm sure of it. Okay. All right. So this is the weekly kangaroo tail. So it actually starts here. And ends up over there. Okay, so what's happening here is that the market opens here on Monday, Tuesday, Wednesday, Thursday, Friday. Is that right? Well, no, here it is. Monday, yeah, okay, cool. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, okay. I was off. So it's actually Monday, Tuesday, Wednesday, Thursday, Friday. Okay. So this was the weekly kangaroo tail, right? Now, the next week you'll notice is right here, Monday, Tuesday, Wednesday, Thursday, Friday. In fact, I'm going to put a shade that one as well. As you can see right there. Now, here's the thing, guys. Where was the low of the week made for this box right here? This is our weekly kangaroo tail. Where was the week's low made? Which day was it? This is critical. Yep. Tuesday. Yep. Yep. So it was actually made right here. I don't know if you can see. It was actually made right there. So so the low is made right here on a Tuesday. Now, the bulk of the up move was made when? It was made in the middle of the week, right? It went up like this, and then it came back down. And then what happened on Friday? Again, even though, I mean, this is a tricky one because it's a reversal signal. So what we noticed in the beginning of the week is it didn't really go anywhere, and it made the low. In the middle of the week, it made the high. And at the end of the week, it came back down again. But I guess what I'm saying is, look at the edges of your charts, guys. Look at the edges of your week. Here's the next week here, which is the follow through after our little kangaroo tail here. This week right here starts on this Monday. Where was the high of the week? It was made on Monday right here. Where was the low of the week? It was made on Friday down here. What did it do after it went high and made the high on Monday? It snapped back down and went lower. What did it do after it made the low on Friday? It snapped back up and went higher. This is one of the great things about trading weeklies is there is a very consistent pattern. If you follow my trades, you know that I talk a lot about the Asian drift. What is the Asian drift? It's the tendency for the market to drift in the, quote, wrong direction during Asia, and then you get some really follow-through volume during Europe and New York, where the market really takes a chunk out of, really moves somewhere. So let's talk about, well, you know what? Let's just talk about yesterday. What had happened yesterday? So here's yesterday's candle on the EURUSD. Let's tag it so we can see it on the 1 hour. And let's talk about what happened on the EURUSD. And actually, let me throw up the period separator so it's obvious. Okay. So yesterday, I'm going to delete this line now. So yesterday, here is the Asian session from here. Well, actually, What time is it in London right now? It's 9:20, right? Is that right? 11:20. Okay. Yeah, 11:20. Okay. So this closes at 12, closes at 11, closes at 10, closes at 9. Okay, so this is 10. Yeah. So that one is right here. Okay. So this move from here to here was Asia. Okay. And London came in here. So what happened yesterday? The Euro Aussie opened right here at this price. It closed right here at that price. So it was a net loss on the day on the Euro Aussie of about 26, 27 pips, which was, not a lot, obviously, not a lot at all. However, it was 27 pips. However, notice what happened in Asia. It went up. What happened on the rest of the day? It went down. This is the exact same pattern you see on the weekly charts. I'm talking about the daily chart here. What did it do during Asia today? It went up. What's it doing so far during London today? Going down. This is the exact same thing that I see happening on the weeklies, where if I think the market's going to go up on the week because I've got a bullish signal on the previous week. So like, let's say I saw like this one. It's not a kangaroo tail though. I'd really like to see a kangaroo tail or at least something. Let's just find one. Okay. All right, let's just say that this is a two candle kangaroo tail. That's what this is. So you add this candle to this candle and you can open here and a close there and a high there, and it's probably close to being a kangaroo tail. Probably the open might be a little bit too low, but let's just say that I decided, okay, I've got this reversal signal. It's off these lows over here. I like where it's at, and I want to go long. Well, if I want to go long the next week, I'm not going to go right when the market opens. Why? Because I think even if the market goes up, it's probably going to mess around on Monday and probably deep into Tuesday until at least the London or New York session opens on Tuesday. So, and likewise, at the end of the week, when Friday shows up, oh, these are daily candles. What am I talking about? Those are all daily, but you understand what I'm talking about. Same principle. When the end of the week shows up, I expect it to retrace. So, for example, if you're in a trade, who wanted the euro? The euro. Okay, let's talk about the euro. So if I'm in a trade on the euro, okay, and like let's look at this week right here. This will be a classic. This one right there is going to be classic. I promise. I don't know if it is, but I'm guessing it is going to be perfect. This is September 8th, 2013, which is right here. And it goes up, 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 and away. I'm going to go for, okay, 2, 3, 4, 5. Yeah. Okay, so Monday, Tuesday, Wednesday, Thursday, Friday. All right. So what happened here was, the market went up, right? But it closed, off the high. And that's because it pulled back at the end of the week here on in fact, Friday, it actually made a lower low than it did on Thursday. But it snapped back up and closed a little bit higher. But this is what happens. At the end of the week, you often see this pullback. Just like at the beginning of the week, you'll see the wick formed. So like, for example, this week right here, or this day right here, that wick would have been formed during Asia. Same thing with the weekly. Where was the wick formed this week? Let's say that on the euro, this week it goes up, all right? If it goes up this week and closes as a green candle on my chart, this wick would almost certainly be formed on, the beginning of the week. I could be wrong on that, but let's just double check that. Let's show our period separators. Make sure we know where it is. Yeah, there it is right there. This is the wick of the weekly candle, and it was formed right here on Monday. And that's normally what you see. Here's the wick of the weekly candle, and it was formed on Monday, right here. That was the bottom wick on this candle, formed on Monday, the previous week. Here's the wick of the top wick of this bearish candle. It was formed on Monday. This is a bit tricky because it didn't go anywhere. So this would be an exception to the rule this week right here. But again, we move, and here's another one. This was not the low of the day, and it wasn't the high, so it was kind of in the middle. The low was down here, the high was up there. So 4, 6, 8, 12. Actually, this was formed on a Monday, wasn't it? This actually was the high wick. It was formed on a Monday, so there you go. But look at what happens here on Friday. Even though the market's run up on Friday, the last 8 hours, the market, well, actually it's not. It's the last 4 hours that pulls back a bit, which is pretty common. And here's another one. The low of the week was made during Monday right here. Actually, to be fair, it was early Tuesday. Still Asian session, though. Is this the wick? I'm not sure. It might be an equal high. No, it was slightly higher over here. But this is the kind of thing you see. So this is the second thing I want to get across. Number one is if you're trading the weekly charts, the stop loss doesn't get in the way. You can adjust your lot sizes. Doesn't matter if your stop loss is 900 pips away. You can adjust your lot sizes. And people say, well, why would I do that? I'm trading for 1 cent a pip or whatever. Why would I want to trade for 1 cent a pip if I have a 900 pip stop loss? Well, the point is you're going to have a 1,000 pip target or a 1,500 pip target. So it doesn't matter how much you're trading. You just need to keep your risk under control and let the profits take care of themselves, right? So that's kind of the thing about that is, you know, people, it's so much easier, I have found personally, to find a really good weekly chart trade than it is to trade the 5-minute charts. That's just a fact. So trading the 5-minute charts, I'm going to pay lots of commissions to my broker, and it's going to be harder. It activates the crack, the addiction area of my brain. There's lots of problems with that. Whereas if I'm trading, a weekly chart, what's going to happen? Well, on the weekly chart, it's going to unfold really slowly. I'm going to know that on Monday, it's probably going to retrace. And on Friday, it's probably going to retrace. So I can wait until Tuesday or Wednesday to get in the trade. And I can not get upset when it pulls back a bit on Friday because I know it's coming. So that's the number two thing that the weekly charts really have taught me is to wait for that pullback on Monday and don't be concerned about the pullback on Friday. Those are all a normal part of how this works. Totally normal. Okay, now let's get into the third thing here. So we've covered two. The last thing I want to talk about is this importance of who else? What other ones do we want to see? Okay, so I just want to clarify. Murtaza is saying, so you could get in on a Monday or a Friday. No, I guess what I'm saying is, let's actually pull up a chart. Let's actually pull up one. Let's find a good, okay. Let's use this one, all right? It didn't quite get to where I wanted it to go, but this was a trade I was watching. This is the EURCAD weekly, okay? And I watched it. First of all, let me just lose this trend line because it's annoying. And this one is as well. But basically, I was expecting when the market broke through this level to come back up and touch this resistance level. It didn't quite get there. But let's say that it did. Let's say that it did get high enough and I wanted to sell. Well, guess what? I would have been interested in, here's where it started. I would have been interested in the sell. Here's your weekly. Here, let me just get rid of this. I would have been interested in the sell after this candle because it came back up and touched it, but I wanted to see the market trade lower. Here's the thing though. The market opened here, okay? And let me just see, where was the wick made on this week? it was probably made higher, yeah, or early, and it was. It was made right here early in the week, and then it fell. So what I'm saying is that there's a couple of different strategies I can take. If I know I want to sell because of that retouch, that we saw the breakthrough and the market came up and retouched it, I could wait for this retrace to happen early in the week, which in this case it happened on Monday, Tuesday, and then it kind of exhausted itself on Wednesday, and then it finally fell on Thursday and Friday, right? And again, notice that on Friday we had this little retracement move up here. See how at the end of the day it kind of went up a little bit? That's your Friday retracement right there. So given that I was ready to sell, I could have sold possibly here on Monday when it went up like this and go, you know what? I think that's a really bear. Instead of waiting for the market to break through the low down here, it actually already did, didn't it? Let's see. What's this low right here? 46.69 here and 46, those equal lows. So the market actually didn't break this low, but normally I wait for the market to break and make a new low, and it would have been on this candle right here. But I can get really aggressive if I want. If I like the weekly setup, I can go, look, I know it's probably going to retrace early in the week, so I'll get in when it goes up, even though I'm selling. Now, I know a lot of people like to do that to tighten up their stop losses, and this is one instance when I would be okay with that. If I've got a solid weekly setup, I expect Monday to retrace, so I can get in. I wouldn't necessarily get in on a Friday, though, because by then the candle's almost printed, right? And most of the time, the moves happen on Wednesday, Thursday, sometimes on Tuesday, and normally I wouldn't see the bulk of the weekly candle isn't usually made on a Friday or a Monday. Now, there are always going to be exceptions, but usually your Friday and your Monday are not the days that make that weekly candle. Usually the days that make your weekly candle are Wednesday and Thursday, and sometimes Tuesday. But the middle of the week is where the move happens, and the edges of the week is when the wicks happen. So this is, to answer your question, Murtaza, I would get in on an aggressive entry on a Monday, but I would not on a Friday, right? On a Friday, I just want to make sure that I realize that the market's probably going to go against me if I'm in the right direction. If the market goes in my favor on Friday, I'm probably on the wrong side of the market. Does that make sense? Because Friday is that retracement day. It has that little bit of retracement, especially at the end of Friday. So if it's going in my favor, that's usually a bad sign. That's usually, I don't want that to happen, right? Okay? All right. Okay, the last thing I want to talk about in terms of, how do I approach weekly chart trading is essentially, being really patient. I think you'll notice here, guys, I don't know if you noticed this, but I had, there was a trend line that was drawn. I think it was right. Where was it? It was right here, something like that. Might have been something like this. Anyway, it's a bit tricky. Might have been something like that. But basically, the market there's a couple of trend lines here. You can see this really shallow one down here. There's a medium one, and then there's a sort of a steep one. It depends on how you draw it. Could have been drawn something like this. So you got 1, 2, 3 touches there. And then it broke through it here, rested on the horizontal level, broke through, came back up, touched, and then fell. Look at where these targets are down here. 40, 70, 38, 36. Given that the trade was going to be triggered somewhere up here, we're talking about over 1,000 pips, up to 1,400 pips targets. But that's what the weekly chart gives you. Look how long it takes to get there. In other words, the weekly charts really involve this. And it's important. You've got to have it. without patience on the weekly charts, there's no way you're ever going to, it's without patience, a perfectly good trading system on the weekly charts can be turned into trash. Really. I mean, it's as simple as that. Without patience, if I can't wait for the market to get down here to 4070 or 3800 or wherever my target is, then I'm going to have a hard time, because the thing is, think about it. If I've got a 500 pip stop on my weekly chart and I don't wait for the market to go 750 pips, I instead take profit at 200 pips, I'm really shooting myself in the foot by taking profit too early. And I ensure that I'm going to lose money over the long haul unless I have a really, really high win rate, like over 80%. So I can't take profit too early. I've got to wait. And I think that's the beautiful thing about the weekly charts is they teach me patience. They teach me to wait. And I must wait for my entry and wait for my exit. Now, I'm always happy to move to break even. That's fine to me because it's like if it hits break even, it's like the trade never happened. But in terms of waiting for my profit target or waiting to get out of a losing trade, like one that's going to go towards my stop loss, I've got to give it some room to go, So it works both ways. If I'm looking for a target, I'm going to wait for it to get there. And if I'm thinking about getting out of a trade because it's not looking very good, I'm going to wait for that weekly candle to at least get to Friday so I can see about what it's going to look like. I know that Friday is going to be a little bit different. It's going to pull back probably. But by the time the Thursday daily candle closes, I have a pretty good idea of what my weekly candle is probably going to look like. Does that make sense? Hopefully that helps. So those are the three things, guys. Number one is I don't have to bet the farm to trade the weekly charts. I can adjust my lot size. And if my broker doesn't allow me to adjust my lot size, then I need to find a new broker. Two is that I know that Mondays and Fridays are going to be counter to the bulk of the move. So Mondays might go up if the candle goes down, and Fridays might go up if the candle goes down. And finally, I have to learn patience. And this is actually one of the reasons why I suggest that traders start out trading the weekly charts. Because there isn't a lot involved. I have to wait more than anything. I have to wait to get into my trade. I have to wait to get out of my trade. And I think that's a great thing. It's sort of counterintuitive to normal trading. Most traders feel like they have to do something. A weekly chart trader feels like he can't do anything. He has to wait, and then he can do something. So everything has to sort of line up for the perfect, weekly chart trade. And it's great. It's a great way to trade. You think analytically. You don't think in terms of, you're not reactionary. You're trading the 3-minute charts. I'll tell you what you're doing. It's the same thing as getting on crack cocaine. You're reactionary. It lights up that addiction area of your brain. Whereas if I'm trading the weekly charts, I'm planning. I'm patient. It's sort of like writing an outline for a story. Totally different experience. I know it's still trading, but it's a totally different experience to trading the lower time frame charts. Totally different. Okay, now I'm happy to go ahead and look at the charts, guys. So go ahead and throw up any of your examples or any charts that you have to look at. Akil says, please, the pound daily, some pattern is there. What are you expecting now? Okay. Pound daily. Okay. All right. So pound daily, it's funny, this is the pair that I've been waiting to buy on. Essentially, on the pound, it looks like we've got a bounce. Okay, so this is kind of how I see this. See how the market came here and then it rejected it at 69.80, and the same thing happened over here. Now it broke through, but it rejected it right here too. See how the market couldn't get through there, and then finally it hit it, stopped, and then boom, finally broke through, came back down, and now we've got the bounce. If today, to answer your question, Akil, Murtaza, I completed a doctorate in experimental psychology, and I taught little kids to think about their thinking. That's what my degree is in, experimental psychology. Taught kids to think about their thinking. And a lot of people didn't think it was possible to do that, but we did it. We did it. Okay, so this is a bounce, and boom, we've broken through, and then we've touched. So if today is a green candle, and let's say it closes above, say, 1.7010, so as long as we get a close above 1.7010, I'll put this on the chart so it's clear. Then I'm ready to go long. So let's say that the market closes where it is right now. Tomorrow, I would put a buy order 5 pips above the high. So the high today happens to be 70.34. So I put it at 70.39. 1.7039 is my buy. And as far as targets, I think on this one, oops. I think it is, here we go. There they are. Okay. So we've got one here. That's 2008. Let's back this up. Let's back this bad boy up and see what 2008 looks like. It looks like we're going to have a zone right about there. So that's 74.80. That would be my target. 74.80 would be an awesome target on the pound. There's another one, probably, 85, 86, 85.60. And it looks like, yeah, there could possibly be one here. This is more of a minor level. That's around 72.69. So let me zoom in on the current price action. So you're looking at 72.69, which from the entry price would be approximately 226 pips. And then 74.80 would be up there. Another 220 pips. That's kind of how I see that. Okay. Hopefully that helps. Even though tomorrow is a reversal day. Right. Great question, Himanshu. So because tomorrow is Friday, it sometimes the reversal is only the last 4 hours or so. Like basically the end of the New York session. Sometimes that's all you get out of your retracement. Sometimes it's not the whole day, right? Sometimes it's just the last closing, up. If these charts, the closing bell is 5 p.m., the closing daily candle is at 5 p.m. New York time. So that might only be from 1 to 5 p.m. New York time that it does that reversal. But if this is a strong close, then absolutely. What I would say about that, Himanshu, which is such a great question, that is, if let's say that it closes right here where it is, and I get triggered on Friday, and it doesn't really go anywhere. It prints kind of like a little doji or whatever candle. Doesn't really go very far. What I would probably expect under that situation is that Monday it wouldn't go much further than this high up here. And then finally on Tuesday, Wednesday, it would probably break through. So it might come up and act like it's going to double top, let's say. And then it might come down a little bit on Monday or Tuesday. And then finally Wednesday, Thursday, it busts up and goes higher. That would be kind of a normal sort of expectancy. That's kind of how I would see it. And if let's say instead, Friday, it rockets up, triggers my trading, goes up, up, up and away. And then Monday, it goes even further. I would definitely, even if I hadn't hit my target yet, which is all the way up here, I would definitely move my stop to break even. Because if Monday's going in my direction, I would expect Tuesday, Wednesday, Thursday to go against me. So that would be that's another way to look at it, is if, just because it's on a Friday doesn't mean I don't have to take a trade. I mean, it doesn't mean I have to avoid trades just because it's retracement Friday, but I have to keep it in context, like what do I expect to happen? Probably not a whole lot. So if I do put my order in, I wouldn't expect a whole lot, tomorrow. Hopefully that helps. Okay, Drew, thanks for your time. I'm holding a short was. I'm holding a short of 70. Oh, you're shorting the pound. See, I wouldn't short the pound. I definitely wouldn't short the pound. Unless today totally collapses and New York takes it south or something like that. So I wouldn't short it. What about gold? Yeah, I'm still waiting for gold to get up to this area. I think gold's going to hit 1348, I think. It looks like, even though it's kind of going down now, I would expect gold, it's pretty much hit 1327. I would expect it to hit 1348. I would expect it to make a run there over the next, say, 2 weeks. And that's where I'd like to sell it, by the way. If it printed a reversal up there, I'd like to sell it. Don't have a reversal on gold just yet. This is more of a consolidation pattern, and it's more likely to keep going up as it is right now. That could change, but right now, it's got the look of a, holding. It's just in a holding pattern. The other one we had was Aussie. Trend trader, Walter, would you adjust your weekly zones to the daily touches? Not necessarily. I would just go with weekly because weekly closes are important. But if I'm trading the daily, then I would adjust the zones to fit the daily bounces. In terms of the, no worries, Aussie. Let's take a look at the Aussie. I actually think the Aussie is probably one of the most confusing pairs at the moment, and not a lot of fun for me to trade. It got up to this level, looked like it was going to break through and pulled back. Got up again, looked like it was going to break through and pulled back. Looked like it was going to fall all the way down here and then it came back up. So this looks like a breakout. This looks like it's going up, and it looks like it's going to bust out of this box. If it does that and gets up in this area here, I'll wait for it to come back down, bounce off the box, print a bullish candle off the edge of the box, which is at 94.20 on my chart, 9420. If it prints a nice bounce at 9420, I'll go long. But until it breaks out of the box and shows me what it's doing, and then comes back and bounces off the box, I'm going to stay away. If it did that, it would look a lot like the pound, wouldn't it? If it were to break up here, break out up here, come back down and bounce and put a really big bullish candle, it would be a lot like that chart we just saw, which was the daily pound. Daily pound was giving us a really strong, it looks like it's giving us a really strong bounce. Now, we haven't seen the close of today yet, but if it does what it's doing right now, that would be a really strong bounce. Norwegian kroner. Okay, let's look at the. I don't normally do that, but let's go to the exotic. What? Isn't it here? Where is it? Is it under forex? Is it under forex? Oh yeah. Okay. Cool. Let's take a look. Wow. So some nice moves. I'll go ahead and put my normal sort of green and red chart here. So this is pretty awesome. Really strong moves. I'll just go ahead and throw my zones on here. All-time high, or the local high. And then here. And then here, and then here, and here, and then here. Awesome. Okay, cool. And then, oh, what? All right. So on this one, it looks like, okay, so this is what happened here. All right, this makes sense now. Okay, do you see what happened here? The market made a rocket move up, and then it printed, like a lot of people would have seen this and said, oh, it's a kangaroo tail. I'm going to short it now, when you see this. Problem with that is the kangaroo tail, first of all, it printed at the end of a giant bullish candle, which is never good. But even beyond that, it's actually on top of support here. It's on top of these highs. It's on top of these lows. It's actually like, if it was a reversal, for one, we'd want to see the candles leading up to the reversal candle slow down and not accelerate. And two, we'd want to see the kangaroo tail on the other side of the zone. And it's okay if the tail extends beyond the zone, but the bulk of the candle shouldn't. And so what this looks like to me is it's what we call a busted kangaroo tail. It means that the market's probably going to take out the tail, which is where the stop loss would have been on a kangaroo tail. And it means it's probably also going to break through 8.40. And that means the next stop after that would be right here, where these candles faded and where it touched right here after the breakthrough. Broke through, came back up, touched it, and fell. So this, to me, it looks like it's a busted kangaroo tail setup, and it looks like it's definitely headed to 8.4040. I hope that helps. I think we've got to wind it down, guys. I really thank you for your time. I appreciate each and every one of you spending time here at the Naked Forex webinar. I do hope to see you next week. I wish you happy trading. Thanks so much for your time, and I hope to see you at another webinar soon. Thanks so much, Glenn. Thanks, Akil. Thank you, Murtaza. Thanks, Mark. Thanks a lot, FX Trade. Take care, guys. Bye, George. Bye, Himashu. See ya. Have a wonderful weekend, too. Bye, Etta. See ya, George. Take care, guys. See ya. Bye.